Good morning, everybody, and welcome to the weekly analysis session for this Monday, the 18th of May 2015. Hope your sporting teams had wins on the weekend. Mine certainly did, with about a 100-point thrashing of Melbourne, so that was good. What have we got on the agenda for today? Well, hopefully you've had time to have a listen to the weekly macroeconomic session which Jeff and I did on Friday afternoon. It typically goes for around about 15 minutes, where we overview the economic data that came out last week and its impact on the markets, and also put forward the important economic data that is due for release this week. So perhaps before venturing out in the markets today, if you haven't watched that session, perhaps just tune into that to catch up on those important sets of data that are coming out this particular week. All right, let's get stuck into it. But before we do, obviously the disclaimer, and the disclaimer basically states that the content of this presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, your financial situation, nor your particular needs. So before making an investing decision based on the general advice presented in any of the ETC presentations, please consult with your licensed advisor before taking any action. All right, let's get into it and see what's on the agenda for today. Okay, portfolio management. We're going to have a quick look at what the market risk is in both markets at the moment. Using the S&P 1500 as our benchmark and the ASX 200 as the Aussie benchmark. Again, just like to recap on some of the small amendments that we've made to our trading, our investing process. Again, just for those of you who haven't caught up on the recent either educational sessions or the weekly analysis sessions, just wanting to touch base with those, having a look at some specific setups and then some time for some Q&A as well. Alright, the portfolio benchmarking model. What's been happening? Well, in the Australia market, on our stochastic indicator that we use as our benchmarking indicator, it dipped below 80 the previous week, so it took us from a low risk market into a moderate risk market, and as such we need to apply a new market risk multiplier. That market risk multiplier is 80%. So if you were trading just solely the Australian market and your maximum allowable drawdown or your maximum VARP, value at risk, across your portfolio in a low risk market was 15% as an example, then as the market dips into moderate risk, we use an 80% market risk multiplier. So it's 80% of that 15%, which brings your allowable exposure back down to the 12% region. Over in the US, the market risk over there is still low risk. The stochastic indicator, our primary indicator to determine the market risk, is still above 80. So if you were trading solely the US market and you were allowed to have 15% of your capital allocated into the market as your maximum VARP, then you are allowed to have 100% of that amount exposed currently in that market. If you've got any questions about that, please give us a call here at Elite Wealth, and either myself, Jeff, or David Seal will run you through that. So this is what it means if you are splitting your portfolio, assuming that you are allowed to have a maximum drawdown of 15% and you are splitting your portfolio between the two markets. Then over here in Australia, because we are in a moderate market risk, and assuming that we're splitting our capital, then 7.5% of it would be allocated to the Aussie market. So 80% of that 7.5% is 6%. In the US market, the other 7.5% of your total portfolio, you are using a 100% market risk multiplier, so that means you're allowed to use all of that 7.5%. Right, again, if you've got any questions about portfolio management or market risk, you know what to do. On any of the emails that we send out to you, we always attach a coaching call link, so please just avail yourself of that. Click on the icon, and we've had quite a number of people who've done that, so thank you very much to those people who have done that, and hopefully getting some benefit and clarifying any areas that they need to work on or understand a little bit better. All right, At the moment, those of you who are choosing still to use variable risk towards scale out events, again, use that as your own discretion. I've talked about this in previous education sessions and weekly analysis sessions. If you are wanting to scale out, then in Australia, because of moderate risk, you're looking for 2-to-1 targets. Obviously, from the watch list perspective, we are continuing to stay in our trades using a trailing stop, and we are choosing to exit once price closes below our trailing 3 ATR. And again, this has been discussed on previous webinars as well, so if you haven't seen those webinars, go and watch those. They are housed in the weekly analysis session on the website. So typically where this session is going to be housed after it's recorded, in that same page, if you just scroll down, you'll see the weekly education sessions there that you'll be able to watch and refer to pick up on some of the small adjustments that we've imparted over the last couple of weeks, just to make the trading process a lot easier. In the US markets, low risk there. So if you're choosing to scale out, 3-to-1 is your ultimate goal for your trades. Obviously, over the last couple of years, the purpose of choosing to trail our stops is that it helps us to get some of those bigger targets. So rather than leaving money on the table, so to speak, by using a trailing stop, we naturally allow the trade to progress to its ultimate outcome. All right, so that's portfolio management. What I'll do now, rather than come straight into the amendments right now, we'll go and have a look at Beyond Charts and have a look at some of the setups. So just bringing up Beyond Charts, last week I was talking about a new scan that we had put together, where we were using the loose scan. I actually quite like the loose scan because it looks for those stocks that are typically having a little bit of a rest. I think one of the issues with the loose scan is that it throws up so many opportunities for us, and it can be quite daunting to go through, 400, 500, 600, 700 individual stocks that have come out of the scan results. So putting our heads together, we just amended the scan a little bit, where the loose scan is now also looking for stocks that have just put in a medium-term trough. Okay, so they've put in a medium-term trough, and that medium-term trough is obviously symptomatic of demand coming back into the market. And so that helps us to clearly be able to more easily structure a trade. And at the same time, what it's done with the scan results, just to give you an example, this last week in the US, the loose scan delivered 567 results. So you can imagine, again, Saturday morning when you get up and you do your scans, those of you who are trading in the US and seeing 567 results, you think, oh golly, that's an awful lot of trades to have to go through. By adding a confirming element, if you like, the fact that we, as an example here on Macquarie Group, you can see on the chart here, we've got most definitely a confirmed trough being put in. And that's exactly what we're asking the scan to do. And then our job is just to go through and see whereabouts is this last trough in comparison to the second from last peak. And what the scan has been able to do, it's been able to actually cut down 567 outcomes in the US down to 215. And in the Australian market, it's been able to cut down 111 outcomes, this is using the loose scan, down to 32. So certainly it's a massive time saver, and I'll go through some of the results that it spat out. The first one here on the Australian market, let's do the Australian market first. I could only find one opportunity this week on the Australian market, and that is Macquarie at this point. Now, obviously, zooming out on this one, what I just wanted to be mindful of is that there were no long-term peaks overhead. So a roof over our head, so I had to zoom out a long way, all the way back to 2007. And that's pretty much the peak back then, getting up towards the $100 level. but we're past that. This little spot through here wasn't a long-term peak, but the one at the top was. So we do have a ceiling over our head on this one. We are able to get at least 1-to-1 into that long-term peak, which is the important element. And looking at this, price is obviously retraced. It's come back down. We've put in a bullish candle last week, and that's what the scan's looking for. So it's the other element of the scan that's important is that whilst we have created a new trough, that the candle that's confirming the formation of the new trough is a bullish candle as well, and that's a part of the scan which is important. So it tells us that we're back into motive phase, if you like, and that's important if we're looking for a new trade set up. So Macquarie, in this particular case there, we've got an on-stop order at 84.21. Our protective stop, remember, it must be at least 2 ATRs below our entry, and it must be at least 0.5% below the most recent trough. So we have a protective stop there at 74.22. Just keep in mind on this one that we do have a long-term peak at around the $97 level. So that's the only one I could find on the US one. On the Australian market at the moment. We'll go through and have a bit of a look there at the US trades there. I've got a couple of questions coming through, so I will come back to those as we go through. First one on the US market we've got is ALV, and again, you can see quite clearly on the scan these green dots are showing us confirming candles. We've had a retracement. We've had a trough that's now been confirmed by the formation of this nice bullish candle here. So again, we just need to scroll out and make sure that there are no long-term peaks in the way, and we're in blue sky. So there's nothing overhead in terms of ceilings that we are aware of course. You know, we don't know where price is going to end up, and that's the important element about trading, that we always think first and foremost about the risk on the trade. In terms of price action on this one, trough at or above second from last peak, clearly above, so representing very strong price action on this one. So all we have to do is make sure that our protective stop, again, is at least 2 ATRs below our entry level and is at least 0.5% below our most recent trough. So we have an on-stop order there at 125.66 and a protective stop at 117.08. Now, in terms of percentage risk, that represents just under 7% in price terms, the difference between where your entry is and where your stop loss is. So just to give you a bit of an idea as to how much work this stock needs to do to get to a 1-to-1 type of target. On average, typically across many trades, our average stop tends to be around about 10% away from our entry level. So again, that's probably a good ballpark sort of figure to be thinking about in terms of the risk on the trade. Because the more and more distance that your stop is away from your entry, it just means that the trade actually has to do that little bit more work. So using that as a little bit of a filter, I've been able to come up with a list this week of around about a dozen stocks. I did have at one point probably around about 15 or so, but I've just cut that those ones that were 12, 15, 17% away in terms of stop distance, because they're just getting that little bit further away. And I think what we want to do is try and find stocks that have to do a smaller amount of work as opposed to a larger amount of work, even though the price action might still be very good. So that's the first one on the list, ALV. The next one in the US, CAG I had on the list here. So again, let's inspect this a little bit. This particular peak here is a long-term peak because we have a medium-term uptrend on the left and a medium-term downtrend on the right. We've already had our first test of this particular level. Price actually went through, is now coming back, retracing and looking to move onwards again. So all I need to do in terms of this scan, where is the last trough in comparison to the second from last peak. There's the last peak, there's the second from last peak, clearly above, so it meets our price action criteria. All we need to do then is set our entry order. Now, just on this one here, I just wanted to point out the value line on our medium term peak. We've got a high there of 38.41. Now, over on the right hand side here, we've got a high of 38.52. So this confirming candle has, and it's a bullish candle as well, has slightly passed our medium term peak. Okay, so the question is going to come, because you're going to get setups from time to time when this has occurred. Does it matter whether that confirming candle has passed that medium term peak? Well, it does matter, because we need to make sure that the candle is not expending too much energy in surpassing that medium term peak. Well, what's too much energy, I hear you say? Well, it's a good question. We need to think about it. So what we need to think about is what could be a simple rule in terms of a price point past the medium term peak where it is still okay to take a trade. Well, if we think about our watch lists, when we're entering a trade, we allow ourselves a bit of room. So we have an on-stop order, generally 2 pips above our medium term peak, but we also allow ourselves a percentage of price to get into the trade, and typically that allowance has been around 1%. So as an example, in this particular stock here, the normal entry would be 2 pips above the high of the medium term peak, so 38.41. So that would have us in at 38.43 under normal circumstances. So if at 38.41 we gave ourselves, or 38.43 rather, 2 pips above that, we gave ourselves a 1% leeway to allow for a little bit of slippage, etc., then that would allow us up to, in this particular instance, up to 38.80 to get into that particular trade. So is this candle, the confirming candle, below 38.80? Yes, it is. So it's still within those parameters to allow us to get into the trade, and because the price action is very strong on that, that's why I've put it in as well. So this is going to happen in a number of opportunities that you look at where the confirming candle is just marginally past the medium term peak, and so on the basis of that you just need to ask yourself, look, is it within 1% of that medium term peak high? And if it is, then certainly I don't think there's anything the matter with taking the trade. Again, making sure that your price action is strong. Okay, so on that particular example there, CAG, entry price of 38.54 with a limit up to 38.80 and a protective stop at 35.68. Right, next one is CI. I'll just move that value line out of the way again. Again, scrolling out, making sure that we're, whoops, wrong way, that we are at all-time highs, or that there's no long-term peaks above us. The price action in terms of this, where is this peak, this trough forming compared to the second from last peak? It's way above. Okay. We've recently just put in a bullish candle, and the reason I know it's a bullish candle is that we've got, as part of our scan conditions, that it must be a bullish candle that is confirming the trough and therefore putting the green dot above. So all we need to do in terms of entry, 2 pips above our medium term peak, make sure that our protective stop is at least 2 ATRs away from our entry, and that we have good price action, remembering that we must also be at least 0.5% below the most recent medium term trough. So that's CI with an entry of 135.02 and a limit up to 136.37. This will all be in the watch list. Stop loss at 123.65. That's CI. Next one on the list, in the US, COL. Again, just checking that we're don't have any long-term peaks to worry about. We're in blue sky. Similar sort of thing. We've had a short-term downtrend. We've had the formation of a bullish candle. Our little signal going off on that last candle as well. You'll see that that's the name of the, when I put the mouse over the little green dot there, with a bit of luck it'll come back up again. There we go. That's just what I've called the scan. US weekly loose plus confirming candle. The confirming candle on there, confirming that we have a medium-term trough in place. So again, where is that trough compared to the second from last peak? Second from last peak's all the way down here. So very, very strong price action through this particular area, having a small retracement. Again, remember that these stocks, when they come up on your scan, are coming up on your scan because they are showing very strong relative strength compared to the broader market. So think about what the US market's done over the last few weeks. How has this stock behaved during that particular time? Last week, putting in a bullish candle, so setting up quite nicely. Your traditional rules, you would have seen $100 on the side there. Again, just recap the round number rules. As far as the watch list is concerned, we are going to be ignoring round numbers. Round numbers tend to have more of an impact on a shorter term time frame. However, if you still feel in your own trading that you want to respect round numbers, that's perfectly fine. You can do that, but for the purpose of the watch list and trade entries, I'll be ignoring round numbers. Again, we're looking for longer term moves, not sort of something that we're going to be in for 5 or 6 weeks. I'm really thinking minimum 6 months, 12 months further, that sort of thing, and we're going to get those sorts of trades if they occur. Those sorts of trades typically aren't going to be too greatly impacted by round numbers. So entry level there on this one is 99.21. 99.21 with a limit up to $100.20. Protective stop at 93.09. So that's outside of 2 ATRs. It's at least 0.5% below that medium-term trough. The green line that I've drawn on here, this is just a trailing 3 ATR. So some of you, if you don't know how to apply that to your charts, certainly let us know. Click on the emails that we send you, or just give us a call, and we'll show you how to put that onto your Beyond charts. So in terms of your trade management, there's really very little to do until this trailing 3 ATR line comes up past your 2 ATR line. Okay, so from that point of view, sit tight, wait until the price action allows that to occur, and then just simply each week when you're assessing your trades, just make sure that price hasn't closed below that 3 ATR. Next one on the list, CSL. This is not the CSL in Australia. This is Carlisle Companies. Again, similar sort of set of price action where we've had medium-term peak formed, price retracing a little bit. Now, confirming candle being created, confirming the last medium-term trough. Medium-term trough, where is that in relation to second from last peak? Clearly well above it, representing very strong price action. We only need to scroll out to see where we are. Are there any overhead obstacles in terms of long-term peaks or medium-term troughs? No, there's not. We're clear of the $100 round number for those who are considering that. So all we need to do, make sure our protective stop is at least 2 ATRs from our entry level, making sure that we're at least 0.5% below that medium-term trough, and that we have good price action. We've got all those 3 elements. So Carlisle Company CSL on stop $100.85 with a limit to 101.86, protective stop at 93.77. Next one on the list, CYT. Again, you'll start to see the beauty of this scan is that it's looking for these medium-term troughs, and in terms of the scanning process, all I've got to do is look at this trough and where is it in relation to the second from last one, and that instantly goes on the short list. Let's zoom out. Where are we? There's nothing above our heads, so it's just a matter of Working out the numbers. So in terms of the last medium term peak, our entry level is at 58.21. Our protective stop at 53.62. So it's on stop 58.21 with the limit to 58.79. Again, this will be in the watch list. Stop guide 53.62. That's CYT. Next one on the list, DPZ. Anybody hungry? Domino's Pizza. Again, price is retraced. It's just last week put in a confirming bullish candle. Let's look at our price action to start with. Is this trough at or above second from last peak? Yes, it is. Let's go and have a look. How close did it get? The high there, $105 on the knocker. The low here, and this is what I'm using for the reference points because I want only the strongest of price action. The low there, 105.25, so clearly above that second from last peak, so representing again good price action. If we zoom out, I keep going the wrong way, we're at all-time highs again. So from that point of view, Domino's Pizza on stop at 114.02 with a limit to $115.16. Protective stop at 104.36. Next one on the list. Genpact. Again, you can see quite clearly we've had a bit of retracement, a bit of a pause, prices turning around and starting to move up. So we've had a couple of bullish candles signal on the chart here, just waiting for the break of this medium term peak. And in doing so, then we have a trade set up, because if we scroll out, where are we in terms of price action? Again, all-time highs, so we've just got to wait for a break of that medium-term peak. So our order becomes on stop at 23.84 with a limit to 24.08 and a protective stop at 21.62 as shown there. So in terms of price action, where is this trough in comparison to second from last peak? It's well above, so again exhibiting very strong price action. Next one, HXL. Let's go and see where we are in the scheme of things. And I think every time I've gone to zoom out, I've zoomed in. There's an old long-term peak here, which is really interesting. That price has, informing that long-term peak, has broken through it and is starting to come back and test this old, what was a major point of supply, now starting to act as a point of demand, which is a good sign. No guarantees. Again, all we can do is manage our risk on the trade. So let's zoom in and have a look. And this is an example of similar example of what we were talking about a little bit earlier, where we've had a medium-term peak formed here, and yet we've had a higher price through here. Okay, so if one way to think about it is that our medium-term peak is deferring to the highest point of supply, which is this third candle after what we would traditionally call our medium-term peak. Now we can enter that at those levels. Again, remember, providing that our entry level up here is within 1% of our medium-term peak. Okay, and in this particular case it is. I've gone through and done the sums on that. So remembering that this is, if you like, it's a medium-term peak proxy, if you like, or it's the medium-term peak by deferral. So all we need to do is make sure that we have price passing that medium-term deferral point. So at that point, making sure that our protective stop is at least 2 ATRs below that entry level, that we're at least 0.5% below that last medium-term trough. So if you're looking to enter this particular trade, on stop at 52.91, protective stop at 47.95. Right, that's HXL. Next one on the list, MTN, Vail Resorts. Again, a lot of these stocks that you're seeing are exhibiting similar price action where we've had a retracement, we've had a trough put in, a confirming candle. All we have to do is check out our price action. Medium term trough, second from last peak, clearly above it. Let's see if I can get this right. Again, the wrong way. Zooming out and making sure that we have nothing above our head. Nice and clear. So we just need to wait for a break out past our medium term peak. So MTN on stop at 108.31 with a limit to 109.39. Protective stops at 97.95. That's MTN. So each one of these charts that we've been looking at, you'll see that I've got my entry lines and my protective stop lines. I've saved these as an analysis so that every time I come back and check these particular trades, it has all these notes, etc., the lines already on the chart. So if you don't know how to create an analysis, again, get in touch with us and we'll help you point you in the right direction so that each time that you type in the stock code, it's got all the material on the chart that you want. So that's MTN Vail Resorts. Next stock, SNE. Again, in terms of price action, really clear price action. In terms of last trough, clearly above second from last peak. I do have a green line above here, so let's just zoom out and see what we've got over there. And we've got a long-term peak. Okay, so we do get one-to-one into the long-term peak. Just something for you to consider on that basis. This last candle also slightly above that last medium-term peak. Last medium-term peak there at 32.60. Close of this candle, that last candle, at 32.77. That extra 17 cents is within 1% of your medium-term peak, so that's fine. We just need to make sure that we're entering, again on stop order, a couple of pips above the high of that confirming candle, so that it closed at 32.77. So entry level at 32.79. Making sure our protective stop is at least 2 ATRs below our entry level and 0.5% below our last medium-term trough. So we have our entry order on stop at 32.79 with a limit to 32.94. Protective stop at 29.62, and again, nice strong price action. Okay, nice strong price action, which is what we're looking for. That's Sony SNE. Next one I had on the list was DST. DST Systems, again price action really nice. Trough clearly above second from last peak. Zooming out, again blue sky territory, looking really nice. Our high there 118.99. The confirming candle there is 119.45, so it's a little bit higher than our last medium term peak. It's within 1% of that particular candle high, so that's fine to go. So our on stop order, we just need to go 2 pips above the high of our confirming candle. The confirming candle is 119.45, so we're going 119.47. Protective stop at least 0.5% below our last medium term trough and outside of 2 ATRs. Has our protective stop at 111.34. So that's DST on stop at 119.47 with a limit to $120.21 and protective stop there at $111.34. Last one I had on the list that and all these stocks have a percentage risk of around about 10% or under. There are a couple of others that I'll have a bit of a look at, and just to show you some examples of those with slightly wider stops. The next one on the list, the last one that I chose to put in is CLGX. Now those of you who are choosing $50 as a round number for some sort of action, I've just put that in there. Look at the price action on this particular one. This was one that hasn't yet formed a medium-term trough. So this is typically what you would call an aggressive entry. I'm not going to put it in. I've just brought it up to show you, I guess, the differences between the two setups. That traditionally, what we might see is a short-term downtrend. We might see a bullish candle. What the scan's actually looking for is the confirmation of another trough. So whilst this is, in terms of price action, potentially a very good setup, I want to see that we've got a confirming candle before looking to actually put it on the list. So shaping up to be a potential trade, but at this point, not putting it in. We don't have the confirmation of that last medium-term trough. Now, a couple of trades that I want to go through and just have a look at in terms of their protective stops. The setups and everything are very, very good. Let's have a look at one here that I found. FCAU. Some of you might have had this on your list. So I'll bring up that stock. I'll go through and let's put on our swing chart to start with, and let's just zoom in a little bit. Now, in terms of price action, this is a stock that hasn't been around for a long period of time, so you can see through here very scatty price action, liquidity issues, etc. Until a stock really becomes noticed by the market and we start to get a little bit better liquidity in it. Aside from that, in terms of the price action, if we have a simple look, where is that last trough compared to the second from last peak? Well, it's clearly above it, so it's representing strong price action. If I go through and put on my US weekly loose and confirming scan, you'll see there's the confirming candle there. So, as in terms of price action, yes, it's exhibiting good price action. It's just that by entering above our most recent medium-term peak and having a protective stop at least 0.5% below our last trough and outside of 2 ATRs, that represents around about a 17% protective stop. So it's pretty big in terms of how much movement it's got to do to get to at least its first target, that 1-to-1 risk reward. So that was the reason why I didn't put that one in the list. Another one that was pretty close was DK. So I'll bring that one up. So I'll pop him in. This one here is a long-term peak over on the left-hand side. Price coming up. It's already had its first test. So all we need to think about is there any overhead points of supply to consider? No, there's not. The price action, the last trough at or above second from last peak, yes it is, so it's exhibiting very strong price action. If we're taking an on-stop order beyond our medium-term peak and we're putting in our protective stop, now that represents around about a 14% risk on the trade in terms of actual price. It's not a deal breaker, but it's getting out there again a little bit as well. So that was the only reason I didn't put that one in the list. Certainly, if you're happy with that particular level, you've got the name of the stock there, DK, and you can add that to what you're looking at. The other one that showed nice price action from the list was REGN. I'll bring him up. A similar sort of thing where we've had a trough coming down. Now I'm going to explore this one. I want to bring out the because we're focusing on price action. So there's our trough. Is that trough at or above the second from last peak? Well, visually it looks like it. Let's just check. The low 433.47. the high 432.38. So that trough coming in clearly above that second from last peak. So that would get a tick in terms of its price action. The protect, if we are looking to trade this one, again, that last candle, it has just eclipsed that last medium-term peak. It's still certainly within 1% of that last medium-term peak, so in terms of the criteria, it fits the bill. It's just that our protective stop on this one, on RGN, was around about 13%. So just, getting a little bit further out there, but other than that, certainly ticks all the boxes for potential setups. That's all I had for this week, guys. Again, the scan did a really nice job this time, Saturday morning, when I got up to go through and have a look at the actual results, and still seeing that there was 215. I thought, 215. I went through it and just purely using the fact that I'm looking for strong or very strong price action, I was able to cut this list down to those that I've got in about 10 minutes. So that was massive. Obviously the time consuming part is going through and working out your protective stops, etc. But purely in terms of structure of a trade and seeing clear setups, it was really, really useful. So those of you who would like to learn about the new scan and have it applied to your own systems, certainly get in contact with us. We'll do a TeamViewer session with you. That's probably the quickest way to do it. We can just copy some formulas into your Beyond charts, set them up appropriately. Most of you will have all the formulas anyway. You just need to tie them together, but we can do that for you and make it very, very simple. All right, some questions. Huge says, it looks like REGN does not like $500. Yeah, look, it could well be that. Could well be that, Hugh. Let's go out and have a bit of a look. Even here at $400, it came up, had a little bit of a sniff, and moved along. And this is a sort of thing that we, looking at in our longer term trades. I mean, here's a trailing 3 ATR stop on REGN. Now, if you forget that there are ever things like round numbers, you wouldn't know what price is doing at these particular levels. And the beauty of having that wider stop is that it's allowed us to be in a trade for a long period of time. Now, I'm not suggesting that there are any trade setups through that particular level, but all you need to do is find some decent sort of price action along the way. As an example, there's a long-term peak there, and let's just bring that over for discussion point in the middle here. So through here, this is a long-term peak price coming up. A couple of opportunities through here that you could certainly set some trade entries. And then all you need to do is wait until your 3 ATR stop comes up and passes, etc. Eventually stopping out. They're the sorts of things that we're looking for. Not worrying too much about round numbers. But good point. Let's have a look. Okay. Yep, Kay is just asking there in terms of setups, in terms of difference between entry price and stop distance. Yeah, look, I think around about 10% is a reasonable sort of ballpark figure. Look, a couple of percent either way, sort of pass that, I don't have big issues with. Really more to the point that sometimes you're going to get some setups that are, 14, 15, 16% away, and then all of a sudden we're really asking the stock to do a bit of work. So just something for you to think about. Again, remembering when you're using the those of you that use the trade journal, that it does have a risk reward calculator in it, and it actually helps you to compare similar sorts of setups in terms of how much work they need to do in terms of percentage and also in terms of volatility. So certainly if you've got access to the trade journal and know how to use that component, it's quite good, because it helps us to tell how much work the stock needs to do, not just in percentage moves, but how likely or how quickly it may get there from a volatility perspective as well. So again, just on the trade journal, if the current trade journal, if any of you need any assistance with that, give us a call and we'll run you through those various components. Okay. Yep, that's right, John. We had Macquarie in there last week. Just wanted to show you there that this week we actually had the confirming candle on it. So that was the difference. Well picked up. Kim's mentioned in terms of percentage move, etc. Yeah, take your point there, Kim, that certainly if you've got a stop of 10%, the price only needs to move 10%. But again, the riskiest time when you are trading is when you're first in a trade. So from that point of view, if the trade's going to run, then having a 10% stop and then just waiting for that 3 ATR to come up and trail, that 3 ATR is what's going to give you the buffer over the longer term. That's good. Steve, by seeking a confirming candle, will that remove a pin bar aggressive entry? Yes, Steve, we're not going to be doing aggressive entries with solely breakout trades. So we're really wanting the demand to be clearly shown and taking the breakout trades past the last medium term peak. That's what will be going in the watch list. Certainly, if you're comfortable yourself taking those aggressive trades, so getting into a trade prior to a medium term peak, that's fine. You can do that as long as you're comfortable with it and you're consistent with it. But for the purpose of the watch list, no, we'll only be doing breakout trades. That's all right. Darren says on MQG 75.61, let's go back to Macquarie and see if we can see a medium term peak at 75, medium term trough at 75.61. No, not considering that, because price needs to be above that anyway, Darren, for it to break that level. So by the time it gets up here and breaks that level, that's well clear of that medium term trough that you're talking about. Darren was talking about a trough at 75.61. For this price to trigger, we have to be above that medium term trough in any case. But good that you're thinking about the medium term trough, because remember, it's not just your medium term peaks that we're considering. Any medium term troughs that are above the price action as well are important to consider. So well picked up, Darren. Let's have a look. Okay, Kim found a couple of other ones in the US. We'll have a look. ASR. I think we might have had ASR last week. I was having a little bit of a look at. Yep, in terms of price action. The reason I didn't put this in the list, Kim, and this is for everybody to know loud and clear, is that the price action that I am going to put for every single trade that goes in the watch list is that I want this trough to be at or above the second from last peak. Now, Carl always used the close of the candle that's forming the trough. Okay, now price action wise, I want to see the strongest price action possible. I want to see this old point of supply, the medium term peak. I want to see the price, if price is going to retrace, that demand is going to come back in before price comes down to this level. So certainly in terms of entry, yes, we do have bullish candles, etc. subsequently, which is great, and it does look very good in terms of structuring a trade. But in terms of price action, I really want for everybody out there to be making sure that those troughs are clearly at or above the second from last peak. But yeah, certainly, other than that, it looks really good. That's ASR. Kim said ANTM. Still looking okay, as it has not moved 1% above last week's trigger and has another confirming candle to boot. ANTM. Yep, so this is one that we were looking at last week, so let's put on the scan and see what it would have done for last week. So last week, there's our confirming candle. So on the basis of that, we had a non-stop order above that, and this did actually trigger. So the on-stop order there, 160.66, and last week breaking that level, 161.38. Those of you who missed that, what Kim is saying is that 161.38, that high, so if you enter 2 pips above the high of that, that's still within 1% of that last medium-term peak. So, and that's a nice looking trade as well. Those of you worried about round numbers, etc., I mean, $200 is well clear of that, and that's looking really nice. Thanks for that, Kim. David, please look at PKI. Okay. PKI. And have a look. Alright, so let's first of all, let's put on our swing chart. I like putting on a swing chart just to highlight everything. At this point, yep, price is coming back down, and this is more of an older style, aggressive type of entry that you might be looking for. Again, just to confirm, I want to see that we've had the formation of a new trough. Now, this one at the moment, we're still in short-term downtrend, although, yeah, that's an outside candle. That's inside compared to this one here. So we've got a lower high and a higher low, so we have an inside candle, even though that's bullish. Look, this looks as though this may well be a trough, and we might get higher candles this next week. All I'm going to do with this one is just wait until I have the confirmation of a higher trough. That's all. So hopefully that makes sense there, William. That's about it, guys. Any other questions? Fantastic. Thanks, Will. Well, that's about it, guys. What I will do is I will just go back to our presentation here. Just pop back on our Silver Fox when I can get my mouse to work. There we go. The other one, maybe that's it. There we go. Just to recap, just remember that the macroeconomics session is Friday afternoons with Jeff and myself. Again, just really enjoying having Jeff there with his expertise in that particular area. The education session's on Wednesday afternoon. I haven't decided what I'm going to do this week. I had very much split decisions between relative strength comparisons and also on position sizing for Wednesday. Trailing 3 ATRs, remembering that when we are managing our trades, that we are sticking with our 2 ATR initial stop, so it's got to be at least 2 ATRs below entry and at least 0.5% below the most recent trough. We keep the protective stop there until the trailing 3 ATR comes up and passes our original stop. Focus on price action, really wanting to see clear, very strong price action for our setups. Price volume volatility, this was discussed in the weekly education session last week. The price volume volatility signal is a great indicator in that it tells you when the market is experiencing some indecision. If that signal happens to go off on one of your trades and you find that you are up a significant amount of profit, as an example, you might be up 40% in 2 or 3 months, then I don't think there's anything wrong with liquidating part of your position. So as an example, you might choose to close half your trade, just seeing what happens, and if price continues on its merry way, that's great. However, in many instances, the price volume volatility signal goes off, and we can experience a reasonable sort of retracement. So rather than giving potentially 3 ATRs, because that's where your protective stop is, but rather than giving 3 ATRs worth of profit away, then I think it's only feasible for you to lock in some profits, not all of it, and then if price does recover, then all you're doing is you're just looking for another opportunity to add that some money back into that trade. The watch list, again, in terms of the watch list, the exiting rules will be when price closes below that trailing 3 ATR, the decision is final, it's imminent, and we have exited that particular trade. All right, that's it from me today. So good luck with your trading this week. Again, if you need any assistance with anything, whether it's the trade journal, whether it's the scans you'd like hand setting those up, etc., get in contact with us and we will help you out. Have a good week on the markets, guys. Bye.